As we speak, we're at record demand. We're at record deliveries of physical gold around the world. The inventories everywhere from the Comex to the Shanghai Exchange to the GLD ETF are vanishing. In silver, I mean, it's beyond ridiculous. The U.S. Mint keeps running out of silver. The perfect storm is hitting precious metals, and the powers that be are doing everything in their power to kick the can that last mile.
Hey friends, thanks so much for tuning in. I'm back on the line, our good friend and economic pundit, Andy Hoffman from Miles Franklin, for a very important update. Andy, welcome.
Oh, well, thanks. I thought you had to be on CNBC to be a pundit.
Yeah, well, only if you work for the Pentagon or our former CIA, Andy, neither of which describes you. I've always noticed that about CNN. They'll fill 24 hours of air all day long, and what do? They bring on talking heads from the Pentagon, a former...
I'm talking about CNBC. If you're a financial expert, you must be there.
Oh, did you say CNBC?
Yeah.
Oh, all right. Yeah, well, we'll cover the real news here and the real economic news today. Yeah. As you know, China's stock market is in meltdown mode despite $800 billion in direct intervention by the Chinese government over the past month. And, we're seeing it all unravel. You covered it on your audio blog on Saturday. Has the big one commenced, meaning global meltdown? And your article on July 27th, the only difference between now and late 2008, ... And we can talk about all of that. Andy, where would you like to begin?
All right. Again, I give kudos to David Stockman. I was just reading his article about China where he said, back in Mao's China, it was power at the barrel of a gun, and now it's power at the barrel of a printing press. And, just like everything Chinese, they managed to screw it up more than anyone else. And they have now the biggest economic bubble, the biggest credit bubble, the biggest construction bubble, and of course the biggest stock bubble that I've ever seen, which is saying a lot. And they're all coming apart at the seams right now. And China is, 15 to 20% of global GDP, which was full bubble mode, and it's collapsing. And today's article is called "Game Over," because anyone who actually believed that there was anything left from the Chinese economic engine, let alone any of the BRICS. I mean, they're all at all-time low currency exchange rates, except for the yuan, which is pegged to the dollar. It's all over now. And it's only getting worse. The commodity index, which to me is the most important in the entire world because it's the biggest source of sovereign revenues and corporate revenues in the world, we're about to break through 40-year support levels. Not just 2008, we're through those already. I'm talking about 40-year support levels, and the fundamentals today are far worse than they've been at any time in the past. And actually, I was looking at the other times in the past where we have gone down to these levels. One was right after 9/11. Which was anomalous. One was the perfect storm where oil prices plunged briefly in early 1999 and then came right back up. And then you have to go back 20 plus years to when commodity prices were this low. And that's with all the money printing, which shows you how much overcapacity, how much deformation, as David Stockman would put it, of the economy and markets has caused such incredible amount of oversupply that even with all the money printing, they've destroyed so much value. So I believe personally that on a real basis, probably on a nominal basis as well, we're going to go through those 40-year lows sometime in the next 6 or 12 months. And, it's already catastrophic what's going on with the global economy, but I don't think anyone's seen anything yet.
Well, a couple of thoughts. I want to talk about deflation before inflation. I was watching a video with Mike Maloney here earlier this morning, and of course he notes the bigger the bubble, the bigger the implosion. Of course, we all note that. We've all been talking about how big these bubbles have gotten, and when they implode, people get hurt. Zero Hedge is reporting these farmers are coming out and saying they've lost everything. They've destroyed their families because they've trusted the government, quote unquote, and they really do trust the government in China. They believe the government would save the stock market from this collapse, and now people are in the process of losing everything because they went into the Ponzi market, and now they're devastated. And I think the same thing's going to happen here at home for a lot of Americans, isn't it?
Yeah, and you're referring actually to Chinese per that article that went into the not the first but the second government-sponsored stock bubble in the past 8 years. The first one went up and down in 2007. It fell by 71% in less than 12 months' time after the exact same thing, the exact same printing press priming by the PBOC. But you bring up farmers, and again I go back to commodities. I can't emphasize enough. Back when I wrote on January 2nd, I wrote an article called "The Direst Prediction of All," talking about all this overcapacity in commodities. You go back to in October when I wrote "Crashing oil prices portend unspeakable horrors." That was when WTI oil was $81, and today it's $47. Commodities. There's no business on earth that has more destructive power than falling commodities. And you're seeing it everywhere. And you mentioned farmers again. Some people like to say, well, I see that prices of food are going down again. Well, yes, some prices are, not really beef or eggs or chicken or a lot of things. But the fact is, there are so many farmers out there that rely on high food prices that have also, because of the deformations in the economy, the cheap money, the banking, cartel doing their thing, that are leveraged to the hilt, and now the prices of farm products are going down. So you can see farmers going out of business, farmland going down in value, et cetera, et cetera. It's a catastrophic chain reaction that's caused by the printing of money and the hyping up of assets that shouldn't be trading where they are. And then, of course, the borrowing on those assets, et cetera, et cetera. And it's just, one part of the chain. And again, you look at the commodity index, which is just about breaking below levels that have been, seen only, back in the 60s and 70s. And I think it's inevitable it's going to do that. And the further it goes down, the more catastrophic the impact's going to be on the world. And of course, there are so many economies in the world where that's their only business is resources. And you can look as close as Australia or China or Canada or Mexico. There's so many of them where these commodity currencies are going to plummet into oblivion, and they all are. I mean, look at the Brazilian real, look at the South African rand, the Australian dollar. All of them are going down. This is the conundrum between deflation and inflation, because prices go down of things that business things that these corporations need, but our cost of living doesn't seem to go down that much, no matter how much you try. Commodities can plunge to the floor. It's not going to make healthcare costs go down. It's not going to make rent go down. It's not going to make just about anything that really matters in life go down.
Yeah, that's interesting. Well, Maloney was noting that this is what he's been predicting for a long time: deflation before inflation and ultimately hyperinflation. Do you agree with that assessment in terms of where we sit right now? Because as you note, we're seeing deflation in commodities, but we're not seeing deflation in healthcare costs. We're not seeing deflation in the real world costs. People are paying more for rent than they ever had. There's less home ownership than there's ever been in this country. We're seeing the collapse. We're documenting the collapse. How far away do you think we are before there's a hyperinflationary?
Well, I've never liked that terminology and that concept of the deflation before inflation. I've said all along about how you have both. There's no rule that says everything goes down, everything goes up. In fact, I wrote need versus want. I wrote 4 or 5 years ago about, generally speaking, the things that you need in life go up and the things that you want go down. Like iPad prices go down, healthcare goes up, especially when you have a socialist government that's creating ridiculous things like Obamacare and an aging population, by the way, which, the demographics are only going to make the cost of healthcare go up for everyone. But again, there are some massive forces of deflation, like I'm talking about with commodities, which utterly destroy businesses and cause layoffs across the board. Does that help you? No, because you're the people who work for these companies and lose your job. And then, of course, as we said, it's not everything. Just because the price of oil goes down, it doesn't mean the price of healthcare goes down. Not at all. I mean, it has no impact at all. So the printing press has its sinister effect on things that you need more than anything, and then some things like healthcare have absolutely no relationship at all to commodity prices. So I think you see both. You see deflation and inflation, and both are insidious. And the problem is that the government will respond by printing money to try to increase the things that it wants to go up, namely stocks and ironically bonds, which should go down when they print money. But it's not working. I mean, stocks look like they've topped. I mean, this is a historic bubble. In China, they certainly have topped. In Europe, how could anyone make a case that stocks are going to go up? I mean, there's the whole Europe is falling apart. I mean, we can have a whole conference call about Greece here, about how nothing's been fixed and that everything is going to probably fall apart there in the next few months. They haven't even started discussing a deal over there because there won't be one. So I think across the board, you're just seeing the horror go. I mean, the end game, ultimately for central banking confidence is when, the granddaddy of them all, the Fed, is forced to admit that it's been wrong, as it, remember on Friday, it leaked its economic projections by accident, which turns out are far weaker than what they say they are. So eventually they're going to have to respond to these falling markets, which is all that they care about. And, whether it's, tomorrow, probably not tomorrow, probably they'll try to goose the markets enough so Janet Yellen could just do more of her saying, yeah, we're looking at the data and, we're hoping things will get better, et cetera, et cetera. But, at some point, between China and the commodities and all these negative headwinds, it's going to, mother nature is going to win more and more and force the Fed's hand to overtly print more money.
Well, let's talk a little bit then about deflation in the precious metals. I just want to remind people, Andy, or maybe you can, if you take a look at the cost of gold and silver at different currencies around the planet, you're going to see rising prices. Of course, with dollar still king for the time being in terms of being the world's reserve currency, and we know that's crumbling, that's fading away quickly. The prices of gold and silver for Americans using dollars has fallen. But in every other currency, it's going up. Let's talk about the reality of precious metals costs. Can you tell people what a value those metals are because the dollar is still king?
Oh yes, well first of all, I wrote about the concept of the dollar of gold trading in other currencies back when I wrote dollar priced gold years ago, because everyone in the States is so US centric, and then I realized, that 6+ billion people in the world price gold in other currencies. And then I wrote it this fall about end of the gold bear market, which I wrote in quotes because it's all manipulation. But the fact is, around the world, the price is rising. Even in euros, it's 20-25% from its high. And then you have currencies like the real and the rand and the ruble and the yen and even the Canadian dollar or Australian dollar, where you're not too far from all-time highs because of all the currency games. And it's not because, quote, the dollar is strong. It's because it's the most liquid. I predicted 2 years ago that that's what's going to happen. It happened in 2008. It happens now. People rush to liquidity when things fall apart. And they also rush out of, quote, commodity currencies, like I just said, when commodities fall. And there's a lot of commodity currencies out there that are falling. So, again, in other currencies, the price is going up. And then as for the cost of production, I don't know if there's any person on the planet who's written more about this. Heck, I worked in the business for 5 years. I went to all these gold mines. I watched them all fall apart. I watched the shares fall apart. I watched the financing fall apart. I mean, the gold industry's been dead for years. And now that the cartel has actually pushed it so far below the cost of production that the miners are going bankrupt, as I said they would. I mean, there's no doubt we've hit peak gold. And we probably hit peak silver. The thing with silver is the production's going to fall even further because now the base metal prices are collapsing. And that's where you get probably half of all your silver production is from base metal mines.
Right.
But, some of this big announcement we had Friday, which, you don't see them talking about in the mainstream. I've been writing for how many years? 3 years about South Africa as like the shale oil industry of gold. It's got the highest costs. I wrote The Rise and Fall of South African Mining. I think it was 2.5 years ago. Well, Anglo Gold, which is the third largest gold producer in the world, and South Africa heavy, they announced on Friday that in the first 6 months of this year, they lost $3 billion. And that's the 6 months. That's before July, before the big smash in gold. So think how much they're losing now. And they're laying off 53,000 people, 35% of their global workforce. Look at the stocks I've been talking about forever, Harmony and Goldfields. This is the 11th and the 6th biggest gold miners in the world. They're going bankrupt. They're way, way, way. I mean, I remember the CEO of Goldfields about 3 years ago. His name was it Nick Holland? He said that the all-in cost, forget these ridiculous cash costs of the industry, the sustainable cost is about $1,500 an ounce. It hasn't changed any. $1,500. That's why there's been no exploration. There's been no discoveries. That's why everyone's been writing things down, and that's why all these stocks are trading at nothing. Because everyone knows they're going to write everything down. Look at a company like Kinross. You don't have to be a rocket scientist to know that they're going to be writing down their assets huge and probably go bankrupt at these levels. And they're the fourth or fifth largest in the world. And you look at Barrick. I mean, Barrick's down 85% from its highs. It's got $13 billion of debt. And it's also, by the way, got a lot of mines in the United States, which because of the strong dollar makes them have a higher cost basis. So it's entirely possible that Barrick, or as I call them, evil personified, because they were caught, they admitted to rigging the price back with JP Morgan about 10 years ago. I mean, they're probably going to go bankrupt. The only reason they haven't merged with like a Newmont is because of ego, but they will have to do it. I mean, heck, their chairman is from Goldman Sachs. These companies are all going to go bankrupt or merge with each other, and they're going to cut production to the bone, just like the oil companies did back in 1999 and 2000. And, production is going to go through the floor. And this is the same time as we speak, we're at record demand. We're at record deliveries of physical gold around the world. The inventories everywhere from the Comex to the Shanghai Exchange to the GLD ETF are vanishing. In silver, I mean, it's beyond ridiculous. The U.S. Mint keeps running out of silver. The perfect storm is hitting precious metals. and the powers that be are doing everything in their power to kick the can that last mile. But as I wrote in today's article, game over. It's all coming. The walls are all coming in on them. I mean, the commodities are collapsing. China's collapsing. Greece and Europe are collapsing. Look at our data this morning. Look at our consumer confidence numbers, our housing data, our durable goods orders. It's just abysmal.
Well, Andy, speaking of the economy and following stocks, there's one in particular that you like to follow, and it really paints the picture of the macroeconomic health of the United States. You've been saying it for a long time. Tell the story of Caterpillar. How does Caterpillar describe where we are in the collapse?
You mean Caterpillar, which even Jim Cramer, the biggest bull out there, claims this is my go-to stock. This is the stock that tells you the real state of the global economy and makes all my decisions, okay? They've now had declining revenues for 32 months in a row. I think they were down 14% year over year. I mean, they are the biggest supplier of mining and farming equipment to the world. And they are in full. I mean, they're falling for a longer period and a larger amount than the 2008-2009 recession.
Right.
I mean, Caterpillar is. I talk about commodity prices as being, showing you how the corporations are doing. Well, Caterpillar's business is showing you, how that business is doing. It's two ways of looking at it. Look at the commodity index and look at Caterpillar. And their business is abysmal. Their stock is abysmal. That just shows you how powerful the PPT is, because Caterpillar is in the Dow Jones Propaganda Average, and yet, companies like that and IBM are falling apart, and yet they still manage to prevent it from collapsing with just nonstop buying of Dow futures.
Well, Andy, before we lose you, I just want to do this because as we document the collapse economically, it's also important that we document the collapse environmentally, ecologically, in terms of health and food, Agenda 21, all these other issues that we talk about at SGT Report and thephaser.com. I just want to go over a couple of brief headlines here to document the collapse in these other ways, and then I want to circle back to one that's right up your alley. Here's one from the Phaser. Mockingbird Media warns West Coast megaquake and tsunami a certainty. HARP is going back online. It's being transferred to the University of Alaska. Fukushima, 2,336,000,000 becquerels of noble gas are discharged every hour. And of course, Andy, as you know, nothing's being done about Fukushima. Uncovered UK's secret plan to deploy more than 5,000 armed soldiers on the streets, all in the name of battling terror. Climate engineering worse than all ecological problems combined. This coming from Dane Wigington and Geoengineering Watch. And of course, Republican operatives plot to sabotage Trump. Andy, I don't think they're going to let Donald Trump get that GOP nomination, do you?
Oh, I think he's a very dangerous man because Republicans don't have a lot, after all these years, they don't have a heck of a lot out there. I think they basically went to Jeb Bush and said, look, you're a Bush and we got nothing. Can you do it? And I don't think he even wants to do it.
Yeah.
And Donald Trump is a dangerous demagogue who's very popular, whether he's a lunatic or not, which he is.
Yeah. Well, I've said that what they'll probably do is use Donald Trump to have some sort of third-party run, which will leave us with only Hillary and Jeb, and then, of course, we'll get another Clinton or Bush in 2016. Here's another news item from the Phaser, one of our favorite videos of all time. All wars are bankers' wars. That comes from our friend Michael Rivero. And here's one from Anonymous. Sandra Bland was murdered. And circling back, Andy, here to Japan and sort of your wheelhouse, Fukushima, 3 of 4 cores now in contact with groundwater. It's an ecological nightmare that's affecting us all as that radiation hits the Pacific Ocean unabated for really centuries to come. Andy, talking about Japan, what lessons can we learn from Abenomics? Let's just finish it out with a history lesson for people here, because Japan is really just a vassal state of the United States government. It's the post-World War II Japan. What can we learn from Abenomics?
Well, for one, that the demographic hell that I wrote about there is for real. I mean, they're not only the oldest country in the world, but they're the oldest by far by about 4 or 5 years. And actually, they're 10 years older than the United States, which is why their fiat bubble burst 10 years before ours did in 1989. And ever since, they've spent the last 30 years trying to fight the deflationary forces with money printing. Shinzo Abe was the president from 06 to 07. He printed money, it failed, and somehow they put him back in office 3 years ago to more than double the money supply. And there they were in the streets yesterday or 2 days ago with tens of thousands of people trying to get him to resign. And this is with the stock market at a 20-year high or 15-year high, because the real cost of living has exploded. Their budget deficit has has exploded, and that's with the yen falling by what, 50 or 60% because of Abenomics. It's just the poster child of how to destroy an economy with money printing and debt. And they just did it before everyone else because they were an older society. So they're just showing you exactly where we're all going. And, I don't think we'll last that long without the whole system going down. But if somehow it did, we'd look up and have, 250, 300% debt to GDP in the next 5 or 10 years as well.
Yeah.
I mean, and that's the comedy they talk about. Oh, the Fed's going to raise rates. Yeah, right. With all that debt around, not to mention the Fed having a $4.5 trillion balance sheet of high duration bonds, of course they're not going to raise interest rates. If they did, it would just be suicide. But ultimately, rates are going to have to go up in Japan and here and everywhere, and it's going to take the whole system down.
Yeah, and as you noted on Saturday, Andy, the big one is in the process of commencing. The big one's happening right now, isn't it?
It's been happening for years. Look at the currency markets and commodity markets. As I wrote an article a year ago or so called "The Last to Go," and I said the only thing they really still have control over are like the Dow Jones propaganda average and paper, gold, and silver. That's about it. Everything else is falling apart, and now those things are starting to fall apart because you're seeing stock markets collapse and commodities really collapse, and and geopolitical instability and what's going on in Europe. So I mean, we're in the end game right now, and will they be able to turn it around and buy themselves a little more time? I don't know, because it looks awfully like Mother Nature's having her way.
Yeah, they're running out of cards to play. Hey, I know I got to let you go. You're going to hop on a plane and head up to Canada for the Sprott conference, correct?
Absolutely, looking forward to it.
All right, Andy, why don't you shout out the website for folks who want to get some physical precious metals, will you?
Yes, been in business 26 years, milesfranklin.com, number is 800-822-8080, and you can always get me at ahoffman@milesfranklin.com.
All right, guys, and you can check out Andy's work at the blog there at milesfranklin.com, and of course you can see his work at sgtreport.com, thephaser.com, and thelibertymill.com. Real news 24/7. Guys, have a terrific week. Thanks for tuning in.